Thank you. Let me welcome you all to the Q4 FY19 earnings call of Uflex Limited. From the management today, we have Mr. Rajesh Bhatia, the Group CFO, and Mr. Rajesh Agarwal, the VP Investor Relations. So without any further ado, I'll hand over the call to Mr. Agarwal, who will take the call over from here. Thank you, and over to you, Rajesh.
Thank you, and welcome to fourth quarter FY2019 earnings call of Uflex Limited. On the call today, we have Mr. Rajesh Bhatia, Group President and Chief Financial Officer. Before we begin, I would like to remind that management will make forward-looking statements during the course of this call, and our actual results could differ materially. I would now like to invite Mr. Bhatia to share perspective with you with regard to the company's operations and results for the quarter and year under review. That would be followed by interactive question and answer session. Over to you, Mr. Bhatia.
Thank you, Rajesh and Shraddha. Welcome all of you on this our Q4 and FY19 earnings call, and I think this has been an excellent year for the industry and Uflex as such. So the highlights for the year are this being the year where we have the highest ever production in our films plants across the world, recorded about 317,000 tons, a 6% growth over the FY18. Individually, which means individually also some of the constituents, some of the plants have also outperformed. The Mexico plant has increased its production from about 36,000 tons last year to 52,000 tons this year, and some of the other plants also have recorded their highest ever levels. So this has translated into for us 18.5% top line growth, out of which a part of it is also because of the higher raw material prices which we had this year. And EBITDA has grown by about 11.5% this year, from 903 crores to 1,008 crores this year. And I think there's no doubt that in FY20 also we will look for higher volumes coming from our films as well as the packaging business. So the packaging business is now the key where we have the capacity and we need to translate that into a higher capacity utilization. The films division across the plants, I think we have some capacity in Mexico, in Dubai, and in Egypt, where we look to consolidate this year. Other than that, India, US, Poland, we are operating at more than 100% capacity utilization levels, and there is not much scope for the increase in production over there, though we keep on doing some technical adjustments to increase the speed of the plants, and that's how we've been able to operate the plants at above 100% capacity. Like America plant, this last Poland plant last year has operated at about 114% capacity utilization. So we keep on, doing some technical adjustments wherever they are possible to ensure that we are going to go ahead with the we can come up with the higher production volumes and all that, which are also add more to the profitability, because the fixed costs are already there, and we are also looking at expanding. We have already said that we're going to set up a facility in Hungary, which is now we are also looking at another facility in Nigeria, and these facilities will come up over the next couple of years, and that's how we are looking at increasing our throughput in this business, which is already almost reached its peak capacity. On a flexible packaging side, yes, we did better numbers as compared to the last year, but I think still we need to look at more volumes over there. Last year also we had a lower number because as a strategy we decided to exit some of the low profit margins, sort of businesses, and look to do more work on, business towards the more value added. The exports business after the first 6 months of a subdued performance has been doing extremely well in the last 4 or 5 months precisely, and we are looking to consolidate that and add on more customers as well as increasing the throughput to our existing customers, so that on a consistent basis we can do about a packaging export of about 2,000 tons a month from that business, and that's what will be our target this year, to consistently do that on a month-to-month basis, which is about 25% growth over currently what we're doing in the export markets. I think that's been sort of the key highlights for the year. The EBITDA for the quarter basis, last quarter we is up by about 14%, and overall for the year, we have EBITDA growth of about 11.5%. At a PAT level, consolidated, we are almost same as last year, 1% increase over FY18, which is largely due to a higher amount of the taxes we have in the current financial year as compared to the last financial year. So the last financial year we had a MAT credit of about 53 crores, which resulted in a lower amount of the tax provisions. But this year we are back to we don't have any such provision, and that's why the tax cost is higher this year, which has resulted into a flattish PAT level on a consolidated basis. So I think broadly that is sort of the highlights of our performance for the quarter as well as for the last year. One more, what we also wanted to put across is that I think we already have seen in the current year that there's a lot of noise in our industry for recyclability and biodegradable solutions. Everybody is, including us, we all working on that, and it's for sure that in the next few years, the companies which are able to have solutions around these two problems that the environment is facing will only survive or grow. And we have made taken substantial steps. You all know that the recyclability, we are already we have existing facilities at all our plants where we recycle all our waste stuff and convert that into something which can be used elsewhere or can be put back into the plant. But biodegradability as a solution, we are working, and we are still a few months away from going to the markets with that solutions, and we reckon that that is going to be a huge game changer as we go into the FY20 and beyond. So that's it from my side, and I would open the discussion to any questions or any clarifications anybody may need.
Sure. Thank you very much. Ladies and gentlemen, we will now begin the question-answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Ranjun Jain from Nirmal Bang Securities. Please go ahead.
Thank you and congratulations to the management team for the good set of numbers. Sir, we have in the press release you have mentioned about the improved scenario in the BOPP market. Can you give a little more outlook and more views on that?
So BOPP, because of the overcapacity we saw in quarter 2 and quarter 3, that the margins were eroding, and because of the overcapacity in the people were actually selling at their costs and all. So we have in the current year seen a better in the current quarter seen if you see the results of Cosmo, you will find that their EBITDA margins for this quarter, while for us it's a blended thing, so that information is not there, but what I'm telling you is that BOPP the worst is behind us, and let me just give you a sense of a margins also. Just give me a minute. Yeah, so BOPP margins, which let's say in the Q1 was about Q2 were about 35 to 38 range. They are now in the Q4. They are about 42 to 45 rupees range. The sales less the raw material cost for the plain films, but so you see that clearly there is an improvement in that.
So sir, is there any specific reason for this increase? Because we, like you said, that till 9 months or so we have seen that the overcapacity situation was there. So you think that the industry has reached a level where it can reach an equilibrium for the time being at least? So
there is some equilibrium which has been given that the consumption growth is there between 9 to 11%. So obviously over a year's time, you reach some sort of maturity situation, but the BOPET margins are still much better than the BOPP margins. So I think there is a scope for the BOPP as the more demand supply equilibrium comes into play. There'll be a better pricing for the BOPP as we get into the Q1 of this year and Q2 of this year.
Thank you. That's helpful, sir. Sir, like we have touched upon the BOPET. So what are the BOPET margins as of now? The last quarter we have seen it was around 47.
BOPET margins are about 50 and 50, between 50 to 54 now.
And you think these are sustainable now? We are reaching like the kind of mid-level average.
I think all depends on demand and supply equilibrium, but as of now we think that these are sustainable.
Great. Sir, a little bit more about the aseptic packaging. How many customers we have now?
We have now 30 customers in the aseptic packaging. 39 customers in the juice category, 4 customers in dairy, and 12 in liquor.
12 in liquor, and how much you said in milk?
Milk is, dairy is 4.
Dairy 4.
Yeah.
Okay. Sir, in the last quarter, we have said that we would likely to break even in Q4. So have we achieved that?
Yes, we have.
So it is broken even in this quarter?
Yes. Q4 we broken even.
Any growth outlook or volume outlook you can give about the aseptic for FY20, sir?
I think FY20 we should look at about between 1.7 to 2 billion packs.
Okay. Sir, the tax is higher, so we should take now this as the base now? Or what is the tax ETR we are expecting for the FY20?
No, I think the tax this is the normal for the tax now.
So, full tax we should assume for FY20?
Yes. Whatever is the tax rate now coming as per this, I think we should take that going forward.
Okay. So just last question. In the Q3, we said that the prices were going down, raw material prices, and that is why we were saying there was some postponing or delay of orders by customers. So you think this quarter, now the prices are, you said that are on the moving trend. So there is a pent-up demand we have seen, and or you say this is the normal scenario and this kind of growth we can expect in coming quarters also?
So as I said, the BOPET for me looks okay. If we can sustain those margins, that is what we expect. And BOPP, we will look to have a better margins.
Sir, more on the volume growth.
So volume growth, see for us, there will be no volume growth from India as such, because even if it is there, it will be very marginal for us because, we are already operating at 100% capacity in India.
Yeah.
So for us, there's not going to be much volume growth coming from India, but, for the industry, there is a volume growth between 9 to 11%, and that's what. So our strategy is that in India we do more packaging, and overseas we do more of the films where the costs in terms of financing as well as some of the energy costs are lesser.
Okay. Sir, what is the capex we have earmarked for Nigeria?
Normally it would cost about $80 million for a new facility.
And just last question on the balance sheet, sir. We have seen that the other current assets is showing a little higher amount of 264 versus 68 YOY. So is there something additional in that one-off? What is it?
Sorry, the other?
Current assets, if I'm not wrong, with showing 264 as the amount for this year against the 68 last year.
Okay. I think we can get back to you offline on this as to what it is. 264 crores you are saying?
Yes, non-current
as compared to?
68, sir, last year, FY18 Concall numbers.
Okay. I'll just, Rajesh, can you just note down and we'll get back?
I'll take from Rajesh, sir, offline, sir.
Okay.
Thank you so much.
Thank you. Next question is from the line of Devansh Tegodia from SIMPL. Please go ahead.
Yeah. Thanks for the opportunity. So my question was that currently we are at 100% utilization in BOPET films. So are we planning any capex or what is our outlook on that?
No, so we are not planning any capex in India for the BOPET.
Okay. So, but it seems counterintuitive that we are witnessing strong demand, and I just want how are we actually seeing the Indian market?
No, so India market on the BOPET, as I said, for the next 1 year at least, our outlook is that, it should, sustain its margins. But, given the high margins currently prevailing, there will be some capacity additions which will get announced sooner or later. And, then closure to it, for a new facility to be operational, it takes about a couple of years. So that's the time when, one can again look at some sort of a margin normalization. But otherwise in India, the things look good from a BOPET perspective. From your perspective, saying that why we are not adding, so I think it is largely a management call as to where should we add. So that's where, we've sort of, as of now, we view that, let's concentrate in India on our flexible packaging part of the business where we have more capacity available to utilize. And any growth in the BOPP or BOPET, let's do it in the overseas locations where we're doing quite good.
And how long it takes to set up the plant?
2 years.
2 years. So if you start construction today, it's going to take 2 years. Okay. And also, can you share the revenue mix and the margin mix? For the product wise, revenue mix and margin mix.
We don't give that numbers. We don't share those numbers.
Okay. Okay. This is
because for us, there's a lot of numbers which are, there's a lot of captive films in India. Whatever we make in India, we use a lot of in-house. And if you see our consolidated operations, largely they reflect the overseas business, which is but only the films business plus some other small entities. But overseas, if you the consolidate minus the the standalone, you see, you will get largely the number which is the performance of our films division overseas. But for India per se, because it's a fully integrated operations, even the plants are situated in one premises only, and so we don't segregate it that way because there's not much of things that we sell in the open market. We rather consume it in-house.
Okay. Thank you. This is it from myself.
Thank you. Next question is from the line of Ayush Buddhata from Equitas Investment. Please go ahead.
Hello, sir. Sir, I wanted to understand what kind of capacities would be coming in BOPET over the next, say, 1 or 2 years, globally?
Globally, I think what we know of in the areas we operate, there is an SRF facility which is coming in Hungary as well.
Yes, right.
And this apart, there may be one other plant which may be coming up. But largely apart from that, there's nothing that we hear in US or any other location much. So the capacity addition is not very aggressive as the things stand today.
Okay. So current global demand would be?
For the BOPET?
Yeah, for BOPET.
I think you'll have to give me some time. Or Rajesh, can you take that offline then? I'll have to search for that number.
Yeah, I'll do that.
No problem. And I guess
think it does not matter much because, we are not worldwide operations. Our operations are largely in US and Europe. And Europe's, in the BOPET still continues to be a market which is a deficient market, and they import a lot of stuff even as of now. So that is why there are opportunities there to set up new facilities.
Okay. And BOPP, I believe, for the next 1 year at least, no new capacities are coming up, right?
I think BOPP, there is not no capacity coming up.
Right.
In India, there may be capacity coming up even in BOPP, but not internationally.
Right. So like you said, the BOPET margins may go down a little, but BOPP should improve.
BOPP has to improve from here on.
Right.
And normally, the good parity is, about the same levels and all that. But I think we will have that in the next couple of quarters and all that, whereby there'll be parity in the margins.
Correct. So the current margins that have improved in BOPP they'll improve or at least sustain at these levels?
Improve होंगे. I think
improve
I can say that I feel that they'll only improve.
Like this is not a one quarter situation, that means.
That is what our guidance is.
Right.
That we should look at consolidating these margins.
Correct. Okay, sir. Thank you.
Thank you. Next question is from the line of Aman Kumar from AK Securities. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, what is the reason for a sudden increase in the other expenses?
Other expenses are basically increased because two reasons. One, we have a joint venture in Israel where we trying to develop technology for replacing the rotogravier printing cylinders. So, we've invested in that setup, and as per IFRS, we have to keep on charging those expenses to revenue, and because we not it's all investment in new technology, and we can't capitalize or keep that as any we have to charge it to P&L, and that's why we've done. So one is that impact. Plus, in one of our subsidiaries, we had some advances given for some real estate, which company has gone into NCLT. So we have provided for that also. So the combined effect of these two is about 56 crores.
How much? 56 crores.
56 crores.
So in the quarter, for the quarter.
During the quarter.
And sir, whether this is, pardon sir?
For the quarter as well as for during the year, whole year as well. So there's one.
Okay. Sir, this Israel expenses is totally written off, or it will be again come in the next quarter also?
No. So this is a continuing thing for us, and the expenditure in the first year were largely higher. So I think that part is now over, and from this year onwards, we can look at not more than $500,000 to $750,000 kind of an expense.
And sir, why there is a sudden drop in the engineering division margins, sir?
Margins में फर्क नहीं है engineering division में. Engineering division में there is slightly lower turnover this year, which is and engineering businesses are normally work that way, but at a profitability level, it's not impacted much.
It's not impacted because in the quarter, for the quarter, it's just 5 crore rupees, sir.
I'm looking at a larger picture, which is for a year picture. So if you see the annual picture for the engineering, while there's a drop in the turnover, the margins, if you see the segment profitability, there's hardly any drop.
And sir, how much turnover we can expect from the Asepto this year?
From Asepto, we should look at about 1.7 to 2 billion packs this year.
That means how much turnover, sir?
So if we say to 1.75, if we take, then it is so about 300 crores.
300 crores. So it will be profit after tax will be there, sir, some in this division?
At these levels, at a PAT level, there'll be more or less break even only.
More or less break even, sir. And sir, one last question about the tax provision, sir. In the international division also we have to charge very high tax going forward?
Yes, ma'am.
International business, sir?
So whatever are the tax rates now, I think there is a tax holiday still remaining in our facility in Poland, which will be there for the next couple of years. And Poland has a 20% tax rate. So apart from that, all other businesses are, will have this sort of a tax rate only.
So on average, it will be around 20%.
I think if we see for the year as such, we just one second, give me a second. So I think average is about 23.8% for us.
Overall. Okay, sir. And sir, what about the pharma packaging? Any development on that, sir? Because I think it's a very innovative product.
Which one?
Yeah, pharmaceuticals packaging that you have developed.
Pharmaceutical packaging, we are, trying to make inroads into that business and all, but will take time, Ji.
Okay. Thank you, sir.
Thank you. Next question is from the line of Mayank Sharma from Shashun Corporation. Please go ahead.
Good afternoon, sir. Thank you for taking my question. I just had a couple of quick questions. First one was that the capex which you announced is what is the payback period for that? Because if I roughly work out, the business's normalized BOPET margins are around 12%, and the turnover would be somewhere around 1100 to 1200 crores. So on an investment of 1100 to, basically investment versus sales would be a 1:1 ratio, which is very low. Normally in packaging it is 1:2 or at least 1:1.5. So the return on capital employed would be abysmally low. It will be below 10% actually. So am I making a mistake in my calculations or?
No, so normally the payback period for the films industry is between 4 to 5 years, depending on as to sort of where the cycle is. So
if what I'm working with,
currently, based on the current numbers, it's about little over 3 years. But I think one should normalize assumed anything between 4 to 5 years kind of a stuff as a normalized going forward, because the good times you can't really predict everything on a best of the times.
I am taking the numbers as the normalized BOPET margin in a normal cycle is around 15 to 20 rupees a kg. Now if I multiply that by the quantities, I am getting 150 crores upon 1200 crores. That is the total investment, 1100. That hardly comes to around 11 to 12%. Now, from what you told me, that figure should be around 20%.
No, so
the money which is being invested seems quite large for the profit which is to be expected in the future.
No, ऐसा नहीं है. As I told you that 4 to 5 years is the kind of a time frame, is the payback period for such projects. And while currently it is low because of the higher margins in the industry, but we are planning things on a,
See, I know Nigeria and Hungary. I don't know about Hungary, but Nigeria is a very high margin business. Would the margin be much higher in Nigeria compared to the Indian operations?
Obviously.
Okay. And sir, I wanted to ask you that if I bifurcate the margins for your different businesses, I come to the conclusion that the margin in packaging, which is asepto and flexible packaging, is quite low. It's almost half of what a normal flexible packaging operation should run at. It's operating, I think, between 6 to 8% EBITDA margin as of today. When would...
business. Yeah. So if we see India business is largely our packaging business only.
Yeah.
And where we have an EBITDA of about 480 crores this year. On a top line of... Just one second. So on a standalone basis, we have a top line of 4,243 crores. So 480 upon 4243 is about 11.3%.
But isme, sir, if I take out the machinery business.
But machinery business for us is a integrated part of that, because, the machinery business is where we give a complete solution to our customers, not only the laminate, but also these machines, filling machines at their end also. So, for some of the customers, while, it's like a Gillette story where, you sell the razor cheap.
Yeah. Because I was under the impression that in BOPET abroad, you must be making around 15-16% margins. So the consolidated
BOPET margins are better in overseas market, and that is where we want to, expand only in those markets. And India, currently you find that, the returns are probably, the margins are a bit low because the capacity is 135,000 tons while we are producing about 80,000 tons. So I think once the capacity is already set up, once you start using that capacity a bit more, obviously, the things will improve.
So this 80 upon 135, I mean, this is, you're producing, I think, 80,000 upon a capacity of 135?
Yes.
So what I'm thinking is this is not a very high fixed cost business. So if you, what is the volume growth that you're witnessing in this?
No, this is a high cost business because some of the plants that we've set up, they require some specialized labor and all. So we are continuing with all those things, maintaining those machines and all that, while the capacity utilization is a bit low. So obviously we need to do a much better job there.
Actually, this never comes out in the Concall that in flexible packaging you're hardly doing around 65-70% capacity utilization, and so you can go up to around
each and every call I've been saying this only, that we need to do a better capacity utilization in our flexible packaging business. Yes.
So what is the volume growth that you're witnessing in flexible packaging?
So current year flexible packaging, we have done only 3% growth because we have sort of shed some of low margin business, and that is where that was intentional, and we've left those businesses. Otherwise, on a normalized basis, you would expect the growth between 9 to 11%.
So what is the reason for the dividend being so low? Because you are a cash-rich company, you hardly utilize your credit limits. And
we do utilize our credit limits, and it's the same dividend what was there in the last year as well. And the payout ratio, if we take the India operations only, it is almost double of what we had in the last year. The payout ratio, if we take India's business only, is about 28%. And if we take consolidated, it is about 5%, same as last year.
Excuse me, Mr. Sharma, may I please request you to rejoin the queue? Thank you. Before we take the next question, I would like to remind participants, please limit your question to 2 per participant. You may come back in the question queue if you have a follow-up, as we have people waiting for their turn. Next question is from Mohit Agarwal from India Capital. Please go ahead.
Hi, sir. I only have one question, and this is regarding the bottom line and the return on equity of the company. Now, if we see the last 2 years, our bottom line has been absolutely flat. Even though we had an increase in revenue growth, we had a EBITDA margin expansion due to a good cycle in the film business. Now, and of course, the drag coming from the underutilized capacities, like you said, flexible packaging and asepto has played a role in not increasing the bottom line. So the question is that just 2 quarters back, you announced that probably you will be consolidating and focusing more on ramping up the capacity so that we can expect a better ROE. And now suddenly we have announced about 1,000 crore of new capacities, which will of course have a drag when they come on stream, 2 years down the line, whatever it is. So is it fair to assume that this consolidation we have seen and this rather stable bottom line we've seen in the last 2 years could continue for the next few years?
No. So I think the bottom line will now from here on will depend upon a higher capacity utilization in the flexible packaging business. And to the extent there is a capacity available in the existing film business, if you can squeeze a bit more out of that, it really depends on that. So now after that, so let's say even if we were to optimize more on the capacities from our existing film plants, which you can do probably in the current financial year, we have a Mexico capacity which is 60,000. This year we produced little over 52,000, so we can produce something extra over there. There is some capacity which is available in Egypt, which we can do slightly more. But by FY20 end, we would have done all those optimizations and come to a situation where we don't have any further capacity in the films business. So which will mean that if we don't take a decision to expand today, so somebody else will come and eat into our market share and our customers in these businesses. So I think even otherwise, I feel that we are a bit late in sort of going ahead with our expansion of the facilities. But nevertheless, I think this was in offing for the last 3 or 4 quarters that we've been discussing. But they've been we decided now to go ahead because it takes a 2 years time to set those things up and stabilize them. So I think it's all part of that. So in the packaging business, as you said, we'll keep on consolidating, we'll keep on adding, achieving a higher capacity utilization, and there is no further capex in these businesses as of now.
Okay, so just one more question. Just continuing from the last question, I do see the levers on capacity utilization for whatever is left now with the company. It's not very high. If I take a number, it looks like in overall film business, it's only like 8 or 10%. Maybe you have more leverage on the asepto and the flexible packaging India business, the only packaging business. So, which is also not growing at the pace we would expect, because we are all now talking about max 2 billion packs in the current year, which is a very low run rate, and it looks like at this pace it may take many years to come to 100%. So my question is that are we doing capacity utilization at a much higher rate than we are actually ramping up our existing ones? So there could be a situation where we are investing more than we can actually turn it into business, right?
No, it's not that. I think, aseptic business where we had some plans, but obviously there has not been that level of achievement in that. So, the differential could be about a 12 months period. So we would have loved to achieve what we've done what we are saying we'll achieve in FY20, probably in FY19, but this has not happened because of many reasons. I don't want to get into those because, for us also, it's a new line of business. But apart from that, I really don't think so that, there is going to be a huge time taken in terms of increasing our, capacity utilization. Maybe a couple of years down the line, we will be looking at expanding even the flexible packaging or, the moment we reach about 80% capacity utilization in our Asepto business, we're talking of spending another 50 crores to what is the residual capex there to, take the capacity to 7 billion packs. So I think next couple of years, FY20 as well as FY21 is where we'll definitely look to do much better in our packaging business, and that's been, the management focus as well.
So what can we also?
So I think on a conservative basis, we should look at about 10% volume growth from the packaging business, excluding the Asepto.
So what did it mean to the bottom line, sir? Because we obviously should have some financial operating leverage now. So what do you expect will this 10% growth should show in the bottom line? Because it's been flat for 2 years.
So a 10% growth, let's say, on a 4,200 crore top line today would be additional 400 crores coming out of that, 425 crores top line additional coming out of the flexible packaging.
Okay.
Your next question is from the line of Kunal Bhakta from First Water Fund. Please go ahead.
Yeah, good afternoon. So what I would like to understand with regard to the Nigeria and Hungary projects is when are we planning the groundbreaking and what is the machinery ordering schedules for these two projects?
I think we will do everything in June. And we will go ahead with, these investments. Land and other things and all that we had taken earlier itself, but, the projects were not announced earlier.
Okay.
And, so those infrastructure things and all that are all settled. We've been having discussions with the machinery suppliers and all that, so they're at various stages now. Okay.
And any thought process in terms of choosing these locations? Of course, Hungary, there is also SRF which has gone there, but with regard to Nigeria,
Hungary was more because Hungary is today offering the maximum incentives in terms of fiscal incentives to set up, sort of businesses there. So while we are already at Poland, which is next door, it would have made sense to continue there, but, we chose Hungary because, they are offering more fiscal incentives, plus the opportunity to also be able to send the workforce and team from India is also very important, which Hungary is much more flexible today than what the Poland could be. Poland was when, we went into the Poland, but, over the years we've seen that, some of the manpower issues become a bit tough there to handle, and it's not that easy. So Hungary is giving us almost 15% of the project cost as a physical incentives to set up the project there, which are not there in Poland. And Hungary, even otherwise, also has a lower taxation rate as compared to Poland.
Okay, so this investment amount of 81 million is net of that subsidy or it's gross?
This is gross.
Okay. And any ongoing incentives?
The ongoing incentives, so this is a cash incentive. Ongoing incentives are in the form of tax. So I think for the next I think at least 7 to 8 years we will not have any incidence of taxation over there.
Okay. And what about Nigeria?
So Nigeria is there are no incentives, but that is apart from the normal depreciation and others you will have. But that's the territory where the margins are much higher.
And what is the competitive scenario like in the market? Because you'll be obviously catering to entire West Africa and other markets.
True.
So what is the competition?
So as of now, if you see in Nigeria, there is no facility so it's all they are importing everything into Nigeria. So that's where, as an early mover, makes sense for us to get into that territory and capture that local market, because today everything is imported, and they have some BOPP facilities, but nothing on a BOPET side.
Okay. There was also a media article about a 66 million pound film plant in West Russia, where some groundbreaking was done by a company, Uflex Films International. So any update on that?
No, there's nothing on that. We have, because Russia is one of the market we cater to. So we have gone there, and we are looking at the chemicals, expanding our chemicals business over there in terms of, supplying that from India. So we are looking at, Russia in a big way, because if we see today from our existing facilities in Dubai, there is a substantial capacity that goes into, catering to the Russia and the other CIS countries. So then there are associated products with that, which are like cylinders or which are chemicals, which we are looking to, sort of get our foothold there.
But there is no timeline to that facility coming up as of now?
No.
Hello?
No.
Okay. And with regard to your 135,000 capacity in India for your packaging, what is the achievable level of output from that facility? 135 must be a nameplate capacity, right? So what should we look at as the peak optimum level of output?
The capacity that you declare in this depends on the printing capacity. Okay, and then there are many other processes also which you do, but the main thing, the way the capacity is determined in packaging industry, is the printing capability. So I think we can do about 100,000 tons based on the existing infrastructure, but or maybe 100 to 110,000 tons. Beyond that, I think it will be sort of a pressure on the downstream infrastructure, which we need to look into at that stage.
So basically, for the next 2 to 2.5 years, you are covered with regard to the existing facility.
Yes.
Okay. And the last question is on the aseptic. There's a company called Great View, which is listed peer. And I was looking at them, and they have never achieved more than 55 to 60% utilization levels consistently in that their existing capacity. So is that something we should look at as a kind of a cap, even with regard to our 3.5 billion packs that we currently have, where we should say that the 2.5 is max that is achievable?
But how do we say that? Because we see Huhtamaki in India, this Tetra Pak in India, which is has the 80% market share, maybe 90% also. But they are utilizing their plants. Their capacity utilization levels are quite high, and so I don't think whether that is a correct reference or not for us to take.
Right. So we are still hoping for 80+% utilization.
We will, yes.
Okay. And how much have we achieved in terms of volumes? What was the exit run rate that we ended March at?
We are doing March, May, we were doing about, I think about 80 million packs.
80 million packs. Okay. And this 1.7 to 1.9 or 2, how much of this is back-ended? What are we forecasting for the first half and the second half?
I think for the year only, let's take it for the year itself. And
okay.
We are saying about 1.7 to 2.
Okay. Thanks. That answers my question.
Thank you. Next question is from the line of Abhishek Joshi from CGS-CIMB. Please go ahead.
Sir, my question was that why have we seen such a dismal performance in Asepto division? Is it because of low acceptance level from our customers or anything else?
I think acceptance level from the customers, in a packaging thing, probably we would have underestimated the time it takes to, get a final yes from a customer. Their test things, they want to test again. They want to test 3 times and all that. And obviously, they are today dealing with one of the largest and the only player in India, which is Tetra Pak. So, I think a combination of all these issues is what would have set us back by about a year. But in a business where you were not in, similarly for us, we find that when we get into some of the export markets, there also the product approvals, things and all that takes a hell of a time, takes anywhere between 2 to 3 years kind of a time frame with the large companies like Nestle, P&G or PepsiCo. And probably in India we thought that that would be much faster because on a normal flexible packaging side we didn't have that much of the time from a conversion of a customer, from an inquiry to a customer. But Asepto has taken time for us to get customer approvals, and starting with small quantities to then increasing the quantities. I think it's all taken a longer time than what we actually thought of.
So how many big customers can we add during the current financial year?
I think if we add 2 or maximum 3, I think we are done. Then by next year we can, by FY20 we can look at FY21, then we can look at a much higher level of the capacity utilization, maybe around 80% or so, if we are able to achieve that. But simultaneously now what we are also doing is we are looking at export markets for this also. So we've already exported in a small way from here, and we trying to till the time these customers start with us in a reasonably sized way, because if they start with us in a small way and it takes time for them to sort of give us a large orders or depend on us to a very large extent. I think we'll continue to explore the other markets also for this product. So either way, I think FY20 will be a very interesting year for this business.
And what would be the major growth driver for us in the flexible packaging business to grow, to fully utilize our capacity up to, say, 129,000 tons or something? So what would be the major growth driver out there?
So I think flexible packaging industry is seeing some consolidation. We find that the smaller units are being taken over by the large multinationals. And these were the businesses which were actually creating a sort of, depression in the prices, because, when they start, they would, to capture the market, they would offer some ridiculous pricing. But if you see last 3 or 4 years, there have been consolidation to an extent, and that is continuing. We see Creative being bought over by one of the large packaging companies. Similar, you see all the 3 Huhtamaki, Constantia, and Encore here have only grown through acquisition of the small players. So I think I would again say that the flexible packaging business also, in terms of its margins, probably I'm not sort of too as I say with BOPP, but probably it would have also hit its low point in terms of the the margins, and obviously we expecting that we will see better margins in this industry. So once that happens, the smaller players get consolidated, or they wind up their businesses and all that. So we will definitely, the large players will definitely have a much better control of the market. And the huge game changer here could be the government pressure on recyclability and biodegradability, which some of the small businesses will not be able to get access to in terms of technology or capability. So that could really make a difference as we go along, apart from the normal consolidation that keeps on going.
Is GST also playing some part in this consolidation you are talking about?
It does, but there are more steps being planned in the GST now, as the government is looking at putting some more compliances in terms of the invoices itself being generated on the portal. So I think it has impacted, but not to the extent we would have also thought so.
Thank you. That's all from my side.
Thank you. We take the next question from the line of Nitesh Bansali from MK Global. Please go ahead.
Hi, sir. Congratulations for good set of number. Sir, can you please elaborate more on your new capex plan? That which kind of product line you are planning at which location?
So we are planning a BOPET line on the in Nigeria, and we are planning a specialized BOPP line in Hungary.
And sir, what is a time frame that we are keeping to complete that? 2 years. 2 years. It means by FY21 we are expecting to get output from this line.
Yes.
And sir, just one more question on your revenue and profit. What is the film division contribution to your Indian revenue and profit?
So that's what I said, that we don't get those separately, because the film business in India is largely captive to the our flexible packaging business. So we take it as a one, sort of consolidated business as such, and we don't, look at the separate profitability for these. Only overseas business is where we look at the separate numbers.
And so, how is your...
Because that is only for, that business, overseas business is all sold in the market, the film.
And so, how is your new segment that Accepted is working in Indian market?
So I think I already answered that question, that this year we will look at between 1.7 to 2 billion packs, selling 2 billion packs. And next year. So if we are able to say sell about 2 billion packs, then that's about 57% capacity, and FY21 say about 80%.
Okay. Thanks for taking my own questions.
Thank you. Next question is from the line of A.M. Lodha from Sanmati Consultant. Please go ahead.
Hello, Mr. Bhatia.
Yes.
Congratulations, very flat number of shares, not very, I can say very good number, but it is a totally flat number. My questions are, sir, I wanted to know the gross debt in the consolidated level, sir, on FY18 and FY19.
Just give me a second.
Yes, sir.
Hello.
Yes, sir.
Yes, sir. My question is, I wanted to have a gross debt in the books of the company at consolidated level.
Just give me a second.
Okay, sir.
पिछले साल कितना था? Hello.
Yes, sir.
So it is 2,100 crores in as on 31st March.
19.
Yeah.
So including working capital.
Including working capital.
Achha. Sir, any debt reduction plan, because you are almost earning 700 crore rupees cash flow on the consolidated level basis, depreciation plus PAT, and our debt is almost on the same level as it was last year. No reduction in the debt.
So, because of the capex in the holography as well as Asepto, there was some debt added. In India, we don't have any debt addition plans now. Our annual repayment this year is about 270 crores, and the next year onwards is about 175 crores. Overseas, we have so the working capital part will remain. I'm talking about this term debt only. The working capital is an integral to business, so that will remain. And this year, probably the working capital utilization would have gone up because as the prices of the crude and the raw materials went up, so the working capital utilizations would have gone up. But the term debt, if we see overseas, we have term debt of only about $40 million, which gets repaid in the next 3 years' time. And but overseas, we will have the new debt coming in for these two facilities.
Okay, sir. So my second question is, sir, dividend distribution policy. As you told that you are distributing the dividend on the standalone basis, you look at your neighbor and your competitor, Polyplex, he has given 15 rupees dividend. Even the Cosmo, which is just 1/5 size of your company, just one size of your company, he has given the 6 rupees dividend. Whereas you have the free cash flow of 700 crore rupees, and you have distributed only 15 crore rupees to the shareholder. So it is a very, very poor payout from our shareholders' point of view, Sir Bhattaji. It is very poor follow. Look at you have got also outside India business. Polyplex has also got the outside India business. They have given 51 rupees dividend this year. So, we just convey our message to the management, sir. The dividend is like you are distributing dividend like a charitable trust. No, not as a shareholder to the company.
Okay.
Then my another question is, sir, regarding your aspect of packaging. Can you tell me, sir, capacity utilization presently this year in this Sanand plant?
Currently is about 40%.
40%. Can we expect in current year it to go up to 50-60%?
Yeah, that is what we've guided, that we're looking at 57 to 60% capacity utilization.
Another thing is that one-sided you said that we will not expand in the outside India, then our market share will be eaten by our competitor. So we are expanding outside India. So similar things will apply in India also. You say that we are not expanding in India. Then if you will not expand in India, when the market will go up, market of the product will go up, then your share will be taken over by your company also.
No, I think you've got it wrong. I'm not saying that we will not grow in India. I'm saying because in India we are focused to grow in the films business is overseas. Our focus to grow in our packaging business is India. And because currently in India we have the capacity available to grow the business, so that is why in the next few years there is no addition, there is no projection to do any further capex to grow any capacity on the packaging business in India. But let's say 2 years down the line, once you reach 80-85% capacity utilization, definitely if it is a growing market, we will need to grow there also. Hope that is clear.
The company which is highly debt, I can say that the company is highly debt.
This is the operator.
Okay.
May I please request you to rejoin the question queue for your follow-up? Thank you very much. Next question is from the line of Aman Kumar from AK Securities. Please go ahead.
Sir, we are expecting a 10% growth in packaging side. Whether this includes the export business also, sir?
Yeah, it includes everything.
And the margins in export is better than domestic market, or is very much same?
Definitely, they are better, sir.
Better than. So that means we can expect better margin compared to 2018-19 in the packaging business?
No, so the packaging business margins in India will grow depending upon the consolidation in the industry, the new value-added products that you will give to the customers. So it's basically that. In the export markets, as I told you, that the product approval time with all large customers anywhere ranges at least 2 years time, 2 to 3 years time, depending on the organization. So while we grow that business, we want to grow that business, and that's a high margin business. But it takes a huge time to get those, sort of approvals in. But having said that, in India, as the industry is consolidating, the margins will definitely improve. Globally, in the flexible packaging industry, clearly the margins are much better as compared to what they are in India. And India will move to that direction as the industry is getting consolidated.
And so, since we got the A rating from the CRISIL, so whether the rate of interest will come down for the working capital and term debt?
Definitely.
How much, sir?
We should expect 1% decrease in India rates at least. We are approaching our banks to do that.
And sir, one more question regarding the what is the status of the expansion in the holographic business, sir?
What is the
holographic expansion, sir?
Holography expansion is still not complete. I think it will take another 3 to 4 months to make it complete at our Jammu plant.
And what is the amount of investment in that division?
We've spent about 200 crores in that.
200 crores. Okay, sir. Thank you.
Thank you. Next question is from the line of Thomas Bridgew from Karma Capital. Please go ahead.
Basically, I just wanted to check if we have a medium or long-term target return on equity, and hopefully, if possible, by when we can reach an ROE closer to 20%. Thank you.
I think ROE reaching to 20% will have to be not less than a 5-year kind of a plan. And, you have to utilize your existing capacity more in the packaging. That's how you can only achieve towards that. And obviously, a better consolidation of the markets happening. So that's the only way. But I don't see anything, if we 20% target, anything less than sort of a 5-year time frame to, reach that kind of levels.
Thank you.
Thank you very much. Well, ladies and gentlemen, that seems to be the last question for today. I would now like to hand the floor back to the management for their closing comments. Over to you.
Yeah. Thank you everyone for joining us this afternoon. We look forward to talking to you again the next quarter. Thank you.
Thank you very much, ladies and gentlemen.